Good morning and welcome to the ADS Securities Markets Update. The first day of the week comes with a few economic releases throughout the day, while the volatility may continue to rise ahead of another series of key economic releases and economic events during the week. Today we will look at the Asian economic releases and the upcoming sessions, and we'll review also some of the major currencies trends for the week ahead. Beginning with the Asian session today, the Japanese GDP came in slightly better than expected. However, the economy also shrank by 0.4%, which is also the first shrinking since Q3 of 2014, and also the biggest Q-over-Q or quarter-over-quarter decline since Q2 of last year, while the estimates were to also shrink by at least of 0.5%. Moreover, the previous reading has been revised slightly higher, or for the Q1, slightly higher toward 1.1% instead of 1%. The GDP price index also slowed down very sharply, and more than expected, toward 1.6% in Q2, down from a 3.4% in Q1, while it had been anticipated to slow down toward 2.2% only. And this is also the lowest reading since a Q1 of last year. Going forward to the European session today, few economic figures will be released from Switzerland and the Eurozone, in addition to Germany, including the retail sales in Switzerland, the Eurozone trade balance surplus and in the Eurozone, and the BUBA monthly report from Germany. And these figures may also have a slight impact on the market throughout the day. As for the US session, there are three economic releases will be released today, including the foreign securities purchases from Canada, the Empire State Manufacturing Index, and the NAHB Housing Market Index in the US. Looking at some technicals today and for this week, and basically starting or beginning with the US dollar index, the index broke below its daily and weekly trend line support last week, which deepened the downside outlook in the coming days, especially if the US figures comes with further disappointment. The index also failed to rise on last week on the back of better than expected even PPI, core PPI. We had the capacity utilization rate and also the industrial production on Friday, despite the fact that all these figures showed a notable improvement. However, the University of Michigan Consumer Confidence Index or Consumer Sentiment Index also declined back toward 92.9, down from 93.1, despite the fact that estimates were to rise toward 93.5. The outlook over this week remains also negative or bearish on the downside or for the week ahead. However, the index need to break through its 200 and 100 day 150 day moving average on the daily chart to clear the way for further declines ahead. On the upside view, we still believe that the upside view is likely, or the upside outlook is likely to be limited below the 97.13 or 97.40, which basically represents the broken uptrend line on the daily chart before the downside trend resumes. Going forward to the British pound, which is also our favorite, or remains our favorite pair for the week or for the past few weeks, which basically continue to trade within the same tight range throughout the last week, and also since mid-July until today, we're still trading within the same tight range between 56.70 and also 55.80s. However, we might see a breakout this week, especially if the inflation data surprise to the upside tomorrow. However, a break above 56.60s and also still needed to clear the way for further upside ahead. As for the euro, which basically managed to the euro basically managed to break well above, or to rise last week toward 112.16, which basically represents last week highs. At the same time, the pair also continued to slide back down again, or maybe even earlier this morning toward 1.1090s. However, this is the part of a short-term decline or short-term technical retracement, what's likely to be limited above 1.10, which basically also represents the downside broken trend line. At the same time, the upside view is likely to remain positive as long as the pair continue to trade above 1.12, and we may see another rise again toward 1.12 for the time being, and a break above that level could clear the way toward also 1.1270. Last but not least, we're looking at the gold prices yesterday, or for the last week, or gold basically advanced last week after the Chinese intervention to weaken the Chinese yuan again. Gold basically spiked right from its 12 years Fibonacci retracement level, which stands at $1,087, where these prices stabilized and closed the month or last month well above that level. And also so far we haven't seen any daily or weekly or even a monthly close below that support. Therefore, gold spiked again last week to as high as almost 11.26, suggesting a bottom of the short term. And furthermore, gold may continue to rise in the coming days toward 1141, which basically presents the long or the medium term support area, which we never seen a test before since last or since the beginning of this year. However, a break this level should be very significant. It should be watched very careful, because a break above that level would confirm like a bottom that we've seen in the past few weeks. Finally, looking at oil prices. Looking at West Texas, which basically closed the week well above $42 support area, and which keeps the hopes for stabilization around that area. And this should be also watched very carefully this week. And a daily, if we saw a daily, weekly, or even a weekly close below that support, this would deepen the downside view toward $40 or even below that. This is it for today. You can follow us on all social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow. Have a good day.